For a few months, we're probably like around 2 months now, I've been trading with an order block strategy that I actually learned online from a different YouTuber, and that really opened my eyes to the way of trading that I was doing. And I'm actually going to show you right now an easy way that you can have some Forex trades, no emotions involved, be a sniper trader, and more importantly, make money. So with that being said, what you're going to see in this specific video is a way of trading that almost nobody teaches you online, because if you actually type in institutional trading on YouTube, you're gonna have some interviews and stuff like that, or some like seminars and stuff, but you're not actually going to see live trading or strategy details in a screen. So what you're gonna see right now, it's extremely valuable. So I want you to do a favor for me in exchange for me making this video. Number one is that you smash the like button to help with the YouTube algorithm. And number two is that you put it in the comment section below if you were aware of this strategy or what you think in regards to this specific strategy. So now let's have some fun. Now, I want to tell you first the difference between technical and institutional trading, because there are a couple of two different things. Now, technical trading, basically what it does is that it studies price action based on either simple fundamental analysis or using indicators as well. For instance, you can say, okay, this is a strategy going uptrend just like this, right? And then we have a breakout and now it's becoming a downtrend. Now that is a technical analysis. You can also say, hey, you know what, with a 50 moving average, this is considered to be an uptrend, and then now it's becoming a downtrend, right? Now that's technical analysis. Institutional trading, basically what it is trying to identify where institutions are actually placing trades. Now, I actually made a video in regards to this specific topic, and I'm gonna put it somewhere in the cards. But basically, institutional trading finds these spots that you see right here, for instance, and tells you, hey, you know what? In this big movement that you see right here, institutions put a lot of money in. They bought a lot of, for instance, I'm looking at the Aussie against the US dollar. A lot of institutions bought a lot of money right here, a lot of Australian dollar, in order to bring the price up. And then they sold a certain amount of money or of currency in order to attract some new institutions to buy in this area. And then boom, brought the price all the way over here. And guess what? Once it reached this level, they sold all the currencies. But we're not talking about, I don't know, $1 million or, I don't know, $200,000 in purchases of Aussie dollar. No. We're talking about billions of dollars being moved from one currency to the other. Why? Because imagine this. If you actually bought at this price right here, let me just go ahead and get a calculator right now. At this price, it was 0.62345, right? That was one price. This is the highest price at 0.65278. Is it 278? No, 200. That's a different price. Well, guess what? If you actually bought $20 billion times 0.62345, which was what you had right there, that was $12 billion pretty much. What is it that you're going to sell it to? $12 billion. Keep that number in mind. So if you sell the same $20 billion at 0.65200, that's $13 billion. So it was around 12.5 billion. So that means that they made over $500 million in one purchase. That's how institutions trade. They don't actually go by technical analysis or this RSI level is it. No, all of the indicators move according to what the institutions are actually trading with. So the moving average, for instance, for the period of 20, it basically is an average of the last 20 candlesticks, all these candlesticks. That's what the moving average is. So when you do technical analysis, you pretty much are understanding what happened within the last 20 candles. But guess who moved those 20 candles, the big institutions. Now, I'm not saying that's 100% the way it works. This is just based on my own research, based on my own education, and you can do your research as well. But once we actually jump into the actual strategy and the proof that the strategy does work, you're gonna understand exactly, like my point right here is not that we are unmasking the institution. No, we're going to trade along with the institutions. And if we are right, at least 50% of the time, we're going to make tons of money. Okay. Now, in order for us to trade with this specific strategy, we do order blocks. Order block is basically a place where an institution or a bunch of institutions place their orders. They don't trade market execution. All right. They don't just enter at the right moment. No, they place limit or stop orders. Limit order means if the price reaches this level, I enter because it's going to retract. A stop order means if the price crosses this level, I'm going to enter buy because it's going to continue going up. Most of the times, and I would say 90% of the times, they enter using limit orders. So an order block is an area where we think, based on our analysis, that the institutions place their orders. So we can say, hey, you know what? Institutions are placing the orders right here. And we can actually determine it right now. For instance, there was a big movement going down, and then there was a moment when the price was actually brought up. And look at how exact is the entry. This is the entry. Like, how exact is the entry? Once it reached that level, boom, it dropped back down. That's how exact trading is with institutions. And we're talking about sniper entries right here. No drawdown in some cases. Now, sometimes we're going to have some drawdowns and sometimes we're going to get it wrong. But the more we practice, the more we understand it, and the more calm and patient we are, we're going to have a lot more chances to actually be profitable in Forex. Now, how orders block work? There is one simple way to determine or identify an order block, and that is the last candle before a big movement. Let me say that again. The last candle, the last opposite candle before a big movement. For instance, there was a big movement right here, right? This is the last candle. And what is the area that we need to focus on? Is the entire candlestick, meaning this right here, including, at least myself, I do it including the wicks. Now, this is a clear example that I wanted to show you. Again, we can actually be looking at order blocks all day long if we want to. For instance, let me just go ahead and find one real quick. This one right here looks good. Take a look at it. This is the last candle before a big movement. And you can see that there was the actual drop, a big movement. Then it went back to the order block area where institutions place the orders, and then it dropped back. This might not be the best example and not as exact one, but it was still wanted. But there are even ones that are even more sniper. Let me look for another one real quick. I think our own example is going to be the best one. All right, let's go ahead and take a look at this one. This is my AUDUSD trade explained. This is my trade of the day. I don't place that many trades. I used to place 4 or 5 trades during the day. I won 3 or I won 2, lost 3, but my RRR, bunch of stuff. Nowadays, I trade differently. What is it that I do? I look for one entry that is a sniper one, take it. Maybe it doesn't even reach the level, that's fine. Or if it does, I'm going to have a clear win. And even if I lose it, that's fine. You can win them all, okay? But let's go ahead and take a look at this trade. You're going to realize right here that we have an order block based on this candle. This is the last opposite candle. Then we had a big movement. How do you identify or determine whether it's a big movement or not? We're talking about lower lows and higher highs. This is a higher high and this is a lower low, right? It's in technical, we call it support and resistance. Whenever there is a opposite candle before a big movement, we need to, if the price retracted right here, that wasn't the last candle before the big movement. But since it broke this resistance area, or it went below the lowest low, then that is an order block. Okay, confirmed. So we actually put the order block and we place the order. The order right here, we can actually, and never ever, how do you place the actual position? You actually leave a space between the order block, slightly above if it's a sell, and slightly low if it's a buying position. For instance, right now I realized that this level right here was actually killing my order block exactly. If this wick wouldn't have existed, then I would have this stop loss like around right here. But since it existed, this would be the area where the actual candlesticks can still touch and retract. So I'm putting my stop losses slightly above. Be careful with the spread of your broker. But with that being said, let's see what happened during this specific trade. Now the day started, and one thing, another one. I'm looking at a 1 hour candlesticks. This can happen at any time frame that you want to. I prefer 1 hour because the longer the expiration, the more confirmation we have. And this happened on October 22nd. Okay, 22nd. We're looking at October 22nd. Then we're looking. Oh, I'm sorry. No, it's 31st. I'm sorry. It will happen. The order block happened on the 27th. I was looking at the year on the 27th. So this is the 28th. This is the 30th because it didn't move during the weekend. Now we're looking at the 31st, which was yesterday. No trades placed. We're not going to chase them. We just place the pending order just like institutions do. Now, it didn't reach the level right there, but then guess what? Right there, it activated and I missed the entry, the first entry. Okay, I placed my order today and I was like, oh, damn. That was at 4 a.m. in the morning. Of course, I was sleeping. So what happened was that, hold on, this one didn't touch. The other one touched and it actually did this. It went into the zone and then drove back. Take a look at what happened on the next two candles. Boom and boom. Big ones. Why do you think this happened? It happened because, and let me just go ahead and talk about my trade result right now. This is my trade result and this is my actual broker. This is a funded account that I have with E20. I just got to get to 8,000. And right now, this is the trade that expired. AUDUSD, $1,230. Now, why did this happen this much? All right, there's no green candle in the middle. All of it happened so suddenly. It just went straight to the take profit that I had. I could even have a lower take profit. The reason why I went to this, because this was the lowest low before there was a manipulation in this section and it's straight back up. So I decided to just go like that, and it was a 2.38 risk ratio, which means out of 2%, I made like 4%, something like that. So I risked like $500 and I made like almost $1,500, $1,300, right? Why did this happen? Can you imagine how many orders institutions had in this section? How much money was put into this specific limit order? Probably billions of dollars, okay? Because if you sell $200,000, $500,000, the candlesticks are just gonna move like this much. It's not gonna move that much. But if institutions put billions of dollars in it, this is exactly what happens. As a matter of fact, I won another trade right here, the exact same thing. On the 27th, it gave me the order block. I decided to use the order block right here, including wicks. It got to this level. Bunch of institutions had their orders right here, and boom, straight back up. Two trades, won with the exact same method and with the exact same analysis. How is it that you can win more of these trades? I know this is probably some short explanation. And by the way, if you actually want to learn more about this type of trading, this strategy, go ahead and put it in the comment section below and put, Chris, I want to learn more or something like that. And then obviously I'm going to start making more videos. But how can you actually win more? Now, we could have, even said, oh my God, the RSI was about to touch, but then he dropped it dramatically. What happened there? And we started doing some technical analysis. And even if you actually go into the 50 EMA, you're like, oh my God, this was supposed to be an uptrend. And by the way, we could say, hey, this is a retraction point because it reached this level. So now it's going to start jumping. And then he broke it. Is because the system is not manipulated by technical analysis, but it's manipulated and played by institutions. This is why sometimes support and resistance is not respected. We see change on trendings and stuff like that. So if you actually want to be on the winning side of Forex, probably this is the place where you need to be. Okay. Now, how to win more? Look, I know there's gonna be a lot of people saying, and by the way, I do have an order block right here on the top. Right here, this one hasn't even touched yet. I did win this trade, but this hasn't even touched yet. What does that mean? It means that I'm gonna have an order placed right here. This is a buy position, slightly below the candlestick, and I'm gonna try to get this word right here. All right. As a matter of fact, I'm just gonna leave it as it is. Then I'm gonna place it, or I'm gonna place it I'm on a different broker because I don't want to touch my funded account. This is Euro USD, and I'm gonna put a limit order in this section. This is the take profit, and this is the stop loss. And by the way, I'm going to show you right now the trade that I won. I'm going to enter with 4% around. There we go. And this is the trade that I placed on the other one. It was a 10% balance increase in my account. 10%. So I got that order right here in 15 pips. It's going to be activated soon. And yeah. How can you win more? I'm sorry, I'm extended, but try to find, look, a lot of people are actually going to make the mistake of saying, hey, you know what? I'm just going to start finding some order blocks, and you like, okay, this right here is the last green candle on the movement, on the movement. And guess what happens is that's not an order block. There you go, you already hit the stop loss. It was a sell position, right? Why? Because not all opposite candles before a big movement are stop loss, are order blocks. In order to find a good order block, you have to have 3 different criteria. 1, a big movement, which could be this right here, a big movement. Number 2, that the big movement actually broke the next resistance or support level, depending on the direction. This was the latest resistance point. It was broken. Cool. And then you enter the trade. And if you enter the trade right, always away from the wick, and then you can enter at the same height, or you can enter slightly higher depending on where you are. There are some of these trades that will reach 5, 6 risk reward. I wouldn't recommend you just go with the highest point. It could be this one right here because this is the new highest low that we have. So that's a 275 risk reward ratio. That's an example. So 3 criteria. Let's go ahead and look for some other examples, and maybe you will have a better understanding. All right, this is a big movement again. This right here, I'm gonna take the entire wick because I want to be on the safe side. So this is a big movement. You take it right there. You put the entry. You actually, the stop loss right here, yes, you can put it right here. You're not going to move it all the way to the higher wick. And then you go to the lowest point of the drop. That's 2.38. We don't know if we're going to win it. I just entered blindly this one. But we're going to see. You see, this one wouldn't win it. Win it. Probably because all of these wicks right here, it identified that it wasn't an order block. But trust me, the more you practice, the more you're going to have better entries. So literally, this is a good order block right here. You see no wicks, no crazy stuff going on. So we're going to enter one trade right here. It could happen immediately, or it could happen within a few days. You already saw it on the previous one. I'm going to go to the lowest point that it reached, 4.58. You need to close partial trades all the time as well. Let's see if it even touches. Oh, it did, but it touched the stop loss. All right. And then you continue like this. Try to find order blocks that will actually meet the 3 criteria. Okay. And then, sorry, I don't want to like fill this up with all my things. There you go. There you go. This one looks like a good order block. We could identify it as one and see what happens there. Some order blocks won't even be touched. All right, this one was not respected either. Probably wasn't that big. This is a big one. It looks better. So you actually keep on practicing. And the coolest thing is that you can actually use Trading View in order to do this replay stuff and start practicing and identifying like, hey, you know what? I don't know. I don't dominate order blocks the way you're supposed to. This right here, I wouldn't take it as an order block because of all these wicks. So you can actually use it to practice, and you're like, okay, so I'm just gonna try to see, find some past order blocks and enter your own trades. That's pretty much it. Enter your own trades. Okay. Now, my biggest recommendation when you actually do this is that don't go with like 5% or 7% risk. Go with like 1%. Because in the end, you're going to make like 2-3% in return. So you shouldn't be that bad. Okay. So hopefully this training actually helps you out. Now, before I finish with this video, in case you're having trouble by trading on your own, you're like, I don't know, you just want an automated trading robot for you, go ahead and visit BLWAutoTrader.com. It's my personal Forex auto trader based on different algorithms, and it's an expert advisor for MetaTrader 4. As a matter of fact, if I show you the latest results that we've had, these are the latest 3 positions that we had with this one. 2 wins for $10,000, $9,000, 1 loss for $1,000. So you could actually say that yes, we are indeed a profitable auto trader. $21,000 out of a $100,000 funded account is always good. So you can actually have it for a monthly price of $97. $97 a month, and you have the auto trader running for you 24/5. If you have a VPS, you can use it, although I do recommend you to use it only during the New York session. And you also have the yearly plan for $997. With those plans, you're gonna have easy trades to follow, where you're gonna manage how much percentage you want to put in every single trade, and more importantly, you're gonna have profitability in Forex, which is something really hard to achieve, but without risking if you don't have the knowledge still. You can use the auto trader for, let's say, 6 months while you're still practicing to do manual trading, then cancel it and trade on your own. But this is just gonna be an extra help for you to make some extra cash. So hopefully I can see you there, BLWAutoTrader.com. Hey, so hopefully you enjoyed the content of this video, and if you did, smash the like button, support this YouTube channel. But more importantly, if you have any questions or comments to share, you can always use the comment section below, and my team will be happy to reply to you. Thank you very much for watching this video, and I'll see you on the next one.